And we are. Good morning, everyone. Welcome to Tuesday's Coffee with Cramer and Colleen. I'm Don Cramer with the Cramer Group at Urban Nest Realty. Colleen, who was here with us yesterday, so you know she's not a figment of our imagination. She's a real person who's been busy the last couple of weeks. She's actually out with another client project today, so she sends her best. But you don't worry, we will be tuning in with Colleen here in the near future. But today we're going to kind of get a little mortgage update, and we are catching up with Melissa Despy with Nevada State Mortgages, who you can also find on Facebook at Melissa Knows Mortgages. So she's here to talk about and give us the update, the 411, the latest and greatest on what's going on in the mortgage market. Hey, Melissa.
Hey, Don. How are you?
I'm good. How are you today? Welcome to today's episode. Welcome back.
Thanks for having me again. Hey, I just want to say, I think I have a complex because every time I'm on, Colleen's never here.
Well, are you Colleen? Maybe you are Colleen, and no one just knows it.
Maybe. It's like Superman can't be in the same places.
Exactly. Can't be in two places at once.
There you go.
There you go. Yeah, that's right. You both have big smiling faces and a lot of fun to
blonde hair.
Yeah.
I see it.
There you go. Perfect. So, she was actually before she got her license. She was actually sort of in between when she had her license. She was in the mortgage industry back pre-Great Recession.
Really?
So maybe you are the same person.
Maybe so. Parallel universe.
Exactly. Yep. At least it's not the alternate timeline. So we think.
Who knows?
Well, welcome back, Melissa. Melissa, just so everyone knows, Melissa's the genesis, the brainchild of the brand name of Coffee with Cramer. So, and it sometimes also continues to highly suggest, when are we launching the afternoon show, Cocktails with Cramer?
Yeah.
Well, in light of everything going on, Melissa, it might happen sooner rather than later.
Sign me up.
Exactly. So cheers to you. What are you drinking this morning?
I think it's donut blend or something with vanilla, French vanilla creamer.
Perfect.
Mm-hmm.
Okay. And
looks like it's probably like cup 5.
Cup 5. Okay.
Mm-hmm.
You're ramping up.
I needed it this morning.
Is that the therapeutic level you're at?
Yes.
Okay. Good. Well,
as we start, levels? I think level 6 of Jumanji. Is that what I've seen on Facebook?
Pretty much. I don't know what we're in right now nowadays, ladies and gentlemen. But what we do know is, last time I checked, we're both in real estate. Real estate's been interesting, to say the least. We've been hit with some of these outside impacts, but nonetheless, real estate is moving and moving at a good clip.
Yes.
So for those tuning in today, if this is the first time to Coffee with Cramer and Colleen in the virtual sense, who you may think it's Melissa, but it's really not, hit the like button. Let us know you're here. Also, comment below what questions you've got for Melissa. Is it about new purchases? Is it about refis? First-time home buyer? Incentives? Jumbo loans? You name it. Melissa's here to answer it. If she doesn't have the answer right now, she will get back to you. So do us a favor, when you check this video out, hit the like, hit the comments, get those questions out there. We've got a great resource here in Melissa to answer those questions. So Melissa, we had pre-COVID, we had initial phases, and you kind of came on sort of after the initial phase and shock back about a month ago, and now we're sort of moving, we're reopening the city and the state, which is exciting. We're getting back out and about. Where is the mortgage market today?
We've still got some restrictions. We're still I have never seen so many verifications of employment on loans before. I mean, usually, we do a pay stub and you do a verification right before it closes, but we are doing them like every week.
Okay.
I think some of that may change now that our casino people are going back to work. I hope. But otherwise, I mean, we've been super busy. A lot of refis. We had a pretty significant refi boom from March, April, May. But now, and honestly, rates are still really phenomenal as for refis, but a lot of banks, including my bank, we've turned our focus towards purchases. We are actually running a purchase incentive right now to, enhance those rates that are already phenomenal. Case in point, I have a gentleman that just went into contract this weekend on an FHA. I locked him at 2.5, 30-year fixed FHA.
Excuse me? Could you say that number again, please?
2.5.
2.5.
Yep.
FHA.
FHA.
Loan.
Yes.
So, and just so everyone knows, FHA loan is loans that meet a, first time, kind of a first time home buyer. It says 3.5% down.
Right.
What's the FHA limit again? Because I believe they just upped it for 2020.
Is it like 369?
Yeah, so we're
somewhere.
Above.
It's much better than it was. It used to be 289 or something like that,
ago,
which
and
was
they kind
ridiculous.
of ratcheted up. So
yeah.
So if you look at the median home price, which is about, we've been bubbling between 310 to 319, that's all, almost 15% higher than the median home price that you can afford up to in an FHA loan. That is amazing.
Yeah. So FHA, like you mentioned, it's not just for first-time home buyers, but it is a great resource for maybe your younger buyer that doesn't have that 20% saved up.
Yep.
Because like you said, it's 2.5 down. You've got mortgage insurance,
2.5
but
or 3.5.
Oh, I'm sorry, 3.5. Okay. I'm thinking of the interest rate.
Yeah.
3.5.
That interest rate's got me like.
I know. Yeah, because I did his pre-approval last month and we were at 2.75, so 0.25% better. But I mean, anybody can do that FHA loan, right. And FHA is a little more lenient with if there were credit issues and things like that too.
Okay.
So, but even on our conventionals, we're in the low threes on a 30-year, and that's, I mean, even on a refinance. This morning I talked to a guy, 3.375.
So low threes on the purchase and 3.375 on the refi.
Yeah.
Okay. So
I mean, everybody's going to be a little bit different based on credit score and LTV and all of that, but
no question.
These rates are just outstanding, and I honestly don't think that we're going to see any significant jumps in the near future.
And I know there was a period of time that sort of initial COVID, sort of when the market seized up, there was a drain on available credit and capital that caused rates to spike because they were trying to slow the roll, honestly.
Right.
So it sounds like that they've opened back up because they've got enough money in the mortgage-backed security space to be lending.
Well, and most lenders, actually, those were self-imposed rate hikes just to slow the business. We got bombarded with refinance applications, and they take time to process. Every file does, but you don't want your level of customer service to suffer either, just because you have a lot of files moving. So
no, you're absolutely correct.
Yeah. So I think most lenders have kind of settled those back down. I know we did. We are still right now, as of today, and it's a day by day thing. This could change tomorrow. We're not currently doing any financing on investment properties, but like I said, that could change next week with everything starting to open back up and people going back to work, things like that.
So yeah, and that is amazing. So when you also think about it too, Melissa is with a local bank here, Nevada State Bank, long time community bank. It's part of a much larger outfit, so they have the horsepower, but in a community brand. So working with Melissa, you're dealing directly with her versus the big online people, the people we see the commercials from, or even some of the bigger lenders. So, and a lot of times, while they try to activate things like less rates and all these great deals, I would say this, working with Melissa, you're in there, or maybe and sometimes have some better options on rates than you do the big boys and girls in the loan space.
I would totally agree with that
You
statement.
totally agree with that. Plus, also the personal touch, and that's the key.
Well, there's that too.
Absolutely, because we've had difficulties with some people that said, okay, hey, I'm going to go to XYZ company, because I'm not wanting to name names because we're not here about throwing under the bus, but you're dealing with a call center, you're dealing with different people up and down the line, so trying to get a sense of where things are going. Those are blips and bleeps that don't need to happen, especially if you're working locally here on a loan with Melissa. And you know what? Sorry, boys and girls, you're not going to get, unless they're doing something silly with some one-off they're doing, you're not going to get a bet. I don't see you getting a better rate. In some cases, probably not even better. It might even be worse. You may have to pay additional points or have additional requirements.
And that happens. Those guys are big boys for a reason. They do a tremendous amount of volume. Mm-hmm. I've come up against, a few of those online lenders, and honestly, if you can send me your loan estimate or whatever, I'm not going to say 99%, but 95% of the time.
Well, let's go to 96.
Okay, 96.5% of the time. My fees are less, because people don't realize that rate sounds great, but there's points that's associated with that, and they don't always know that until they get that loan estimate. I had a lady that was doing some construction on her home. I referred her to a hard money lender because I couldn't help her right away, and he wants to refinance that loan for her. $10,000 of closing costs on I think maybe $320,000 loan. That's just crazy. I haven't seen the loan estimate, but that's just crazy.
Yeah, no, absolutely. And I'm on one of those sites right now, and they've got a 30-year fix for 3,375, but it's a 74.9% loan to value. So that sounds like
you're under 80,
25% down, and 1.875 points due at closing. And
on like discount?
Yep.
Discount points?
You have to purchase those at closing to get the rate down to that.
See, and mine was 0.
And the APR,
and I was on a rewrite.
Because they advertise the rate, but the APR is 3.617.
Okay. A little, yeah. Your APR should always be a little bit higher, but not that much.
Not 0.3% plus, or just shy of 3% plus almost 2 points to buy down, and a higher loan to value, a pretty high loan to value ratio. So that's even beyond a 20% down.
Right.
Yeah, 25% down. So again, it doesn't, while we think the big companies are there and working in mass, and yes, they do, doesn't necessarily mean it's a better deal. So, Melissa, so we've awesome to hear about FHA, awesome to hear about conventional. There's been some talk about ARMs. What's going on there? What's your thoughts on ARMs? How should people look at an ARM versus a conventional? What should they use to think about there?
Well, when all this virus stuff started happening, jumbo fixed rates they didn't go away, but they became extremely hard to find a lender to do one. I think we retained ours, but the rates just were not attractive. Our jumbo arm is a portfolio product, which means that the bank retains it. It's serviced by Nevada State Bank. Gives us a little more flexibility with what we can and can't do. Typically, I know we've probably discussed this before, but our niche is definitely the self-employed borrower. Nevada State Bank started off as a business bank, and we still do that type of client very, very well.
So that small business client.
Yeah, or they're not all small.
Not all.
They're local. Some of them, most of them are local. But those portfolio loans, we do those all on ARMs. We have a 5, 7, and 10. Personally, if I was buying $1 million home or over 5, 10, I'm going to do a 10-year ARM. 10 years is a long time.
Yep.
So a lot of things could change. If this is your forever home, you're probably going to do some improvements to it, upgrades, different things, and you can always refinance it. And refinancing is typically pretty cheap. We also have purchase specials on our portfolio rates right now. I'd have to pull up the email because this was last week, and last week seems like a lifetime ago.
How many lifetimes have we lived in 2020? I'm not quite sure.
Well, I have a meme that says something about what a year last week was or something like that. Yes. But I want to say low threes on those as well, and on a jumbo, that's cheap money.
Right.
No doubt. We also offer relationship pricing.
What's a relationship price?
A relationship price can get you anywhere from 1/8 to 0.5% off the rate. So think about that for a minute.
Okay.
If your 10-year is at 3%,
yep,
and you have funds with the bank, because we're getting ready to update our tiers. That's why I don't want to say how much money you need to have with the bank, right. But you can get up to 0.5% off that rate. So you'd be at 2.5.
So if you're a banking client and you have your checking there, but you also have some assets there, let's say savings, funds, things of that nature, that will allow you some, you're accessing some personal banking incentives.
Exactly. And even if you don't have that bigger relationship with the bank, if you're doing a portfolio loan and you open a checking account and agree to do ACH for your payment, that automatically gets you 1/8 off.
Okay, so just by opening your account, doing ACH for your mortgage payment, you're already an eighth to the good.
Yep. Now this is on portfolio only. We don't offer that on our conventional conforming. Yep. Because those are Freddie Fannie, but our portfolio stuff that we retain, absolutely.
Okay, great. That's awesome to hear. And so, interesting point you bring up on the jumbo. I mean, even though you're able to service, you even through the worst of COVID, you're still doing jumbo conventional, but a jumbo arm, you have this rate incentive, and in a 10-year situation, I mean, that's sort of typically the third of the life value of the loan. Mm-hmm. In most cases, a 30-year, and then at some point in time, any time in that 10-year period, you most likely you can make the option to do a refi of some sort. I mean, yeah. We were 5 years into our mortgage on our home. I mean, we went from a 30 to a 15.
There you go.
And that was on year 5. So it's not like a 10-year you're just going to go, okay, I'm stuck with 10 years. And most people live in a house 7 to 10 years anyway.
Right.
That's the average.
Yeah. And a lot of the clients that do those mortgages, I mean, they watch rates. They know what's going on with the market, or, they reach out to their mortgage professional and ask them, hey, is it time to refinance? Is it, time to do this, whatever. So like you said, you're not stuck with that by any stretch of the imagination. There's no prepayment penalty or anything like that. You can refinance whenever you want, if you want.
That's great. That's great. And then what about, we talked a little bit about, you said construction loans, things of that nature. I mean, the commercial market. Do you do any commercial, or are you strictly residential?
Strictly residential.
Okay.
Mm-hmm.
Now,
but we do typically right now, we are suspended from our construction and our lot loans. But those will come back, as soon as the market settles down and things kind of get back to whatever the new normal is.
Right. Those will start opening back up.
Oh yeah, for sure.
Absolutely. Absolutely. So we touched on FHA, which, that number still is ringing in my head. A little bit about convention.
Makes you want to go buy a house, huh?
Yeah. Let's go get an FHA loan. I mean, you think about it and say, 3.5%. Yes, you've got the PMI, but you know what? It gets you into home ownership, and then the ability at a later point in time, if you saved up more, or meet certain criteria, PMI is not a forever thing. You can work out of that.
It's still cheaper than rent.
Right. Absolutely.
And you're building something. You're building equity. Maybe to some extent you're still getting some kind of a tax write-off. I'm not sure how much, but
yeah, 2.5. That's not a whole heck of a lot.
Right.
But I mean, at 2.5, I mean that's awfully low, ladies and gentlemen, out there. And even in the conventional senses, where we're still in the low threes, we are at quote unquote historic lows. In any sense, amongst your peers and the news you're seeing, is this a short-term effect, or are we going to see this, let's call it, because for better or worse, we've just went through COVID. We've got the economic impacts. Lord knows what's going on right now with all the latest news. At some point in time, I think the murder hornets are going to become back in vogue again. But then, then at some point, then we kind of have an election. A lot of people, there's a lot of discussion, during election time, a lot of people kind of sit on the sidelines because they're not quite sure, which way it's going to go. Because if it goes one way, that means certain businesses, industries get affected versus others. Do you see the rate sort of staying like this over, let's say, the near term, next 3 to 6 months?
Yes.
Okay.
I can't imagine what could happen. I don't even want to go there, but I can't imagine what would cause rates to jump up.
Right.
I mean, and honestly, we've been in the threes and low fours for quite some time. I mean, now we're low threes, but everything that's going on, I mean, I certainly understand that. And the market and mortgage rates have typically, they kind of run parallel, and now there's no rhyme or reason to anything that's going on.
No, you're exactly.
I seriously doubt that the Fed is going to raise prime before the end of the year. I mean, again, it probably depends on the election. And while that doesn't directly affect mortgage rates, it has kind of a backhanded effect.
There's kind of a correlation.
Yes, yeah. Yes. Prime affects your HELOC rates and your credit card rates directly, but I don't see rates going up. I really don't. So if you've been thinking about buying, I would be all over that.
Right. Absolutely. And there's been some articles recently, when you think about it, for the most part in the United States, the one area that stayed essential was construction.
Mm-hmm.
So construction, especially here in Las Vegas, residential home building carried on, commercial construction carried on. Now, businesses may have chosen on, decided, okay, well, do we have the lending or things of that nature to carry on? I mean, that was an individual case, but they moved on, and with the rates the way they are, there is talk that the housing market may be the catalyst that pulls us out of our this impact on unemployment, because it is still moving along. Rates are cheap. For better or worse, we still have a housing shortage nationally. NAR reported even at the beginning of the year, I think we were still 3 million homes short.
Wow.
So, and I'm not quite sure what the number is here in Las Vegas, but when we did some looking, just the amount of people migrating to Vegas, whether it was from California or other states, looking for, lower costs or business opportunities here, we weren't quite building or replacing homes as fast as clients were needing them. So in all, I know a lot of people have been sort of, there's a group of people, Melissa, you probably heard, that says, okay, I'm waiting for the market to crash. Okay. Got it. I'm waiting for the stock market to crash too. I'm waiting for Amazon to go to 500. Right now, I think it's at like 24 something.
Yeah. They're going to be waiting a while.
They're going to be waiting. Yeah.
This is not 2008.
This is not 2008.
This is a whole different animal than 2008.
Yep. So what, on mortgages to things of that nature, what are you suggesting? You're having a conversation with people. Let's say, I've got a buyer saying, okay, let's get you in touch with Melissa. Here we go. They're going to tell you, they're looking at what you've got. What are the first couple things they need to put together to start working with you?
As far as like if they wanted to do a pre-approval?
Yep.
First thing that we're going to look at is obviously credit. Credit is a huge driver right now. Our minimum credit score was bumped up, I want to say, in April. Our minimum now is a 680.
Okay.
Whereas before we were at a 620. So that's definitely something that I want to look at right out the gate. Because if there's issues, hurdles that we need to overcome with credit, those take time. Those take time to fix. But then from that point, obviously, you need to be back to work.
Employment.
Right.
How are you getting paid?
Yeah. How are you getting paid? Are you getting paid?
Right.
Unfortunately, we cannot use unemployment as qualifying income, so you need to be actually back to work. And then, what you have as far as for down payment assets and those types of things. Are you have your own money? Are you getting a gift? There's different, different options as far as for down payment. Now, Nevada State Bank does do some down payment assistance programs. We have a dedicated team of loan officers that do those specifically. So not all of our loan officers are certified to do those. I am not certified to do those. So I would refer you off to one of my team members. But they do it, and they do it well. I mean, I have told you this before. That's why I'm at Nevada State Bank, because they know what they're doing and they do it well.
That's great. That's terrific. And so with the credit score, people that are needing some assistance, do you have any recommendations as to what they can do or resources for them to help nudge that up?
I do.
Okay.
I have made a couple of suggestions to clients just on Friday. I don't know if I would get in trouble for talking about those because I am not a credit repair person.
Right. But you could also put them in touch with
Yes.
some as well.
Yes. Yeah. I have they're not coworkers, but referral partners that specialize in that type of thing.
Right. Absolutely. Absolutely. And raising credit, if people are diligent about it, isn't a long-term task.
No, not really. I mean, it can be anywhere depending on the level of repair needed. I mean, it could be 3 to 6 months. Now, granted, if it's something, a traumatic event like a bankruptcy or a foreclosure, it could be 4 to 7 years. We need to be on the other side of it. But collections, hey, they happen. They happen to everybody, especially medical collections. So those are not such a big factor. And the other thing you need to look at too is it a one-off, or is this standard practice for this client?
Right.
So that kind of plays into it. If it's standard practice, it may take you 6 months or to a year to get yourself cleaned up because we don't have any history of you doing anything on time.
Okay, so basically, if you were chronically late across the board, and the story tells that, it's going to take longer to repair it than a one-off or a unique situation that you can wrap. You can put a plan around.
Right. Yeah. And work with it. Absolutely. The thing I like to tell people is, this kind of puts it in perspective. We're loaning you $250,000. So we need to kind of make sure that you pay your bills on time. We'd like to, we're not in the business of selling real estate, so we don't want that house back.
Right.
So, and sometimes when you break it down like that, people are like, oh yeah, that is a lot of money. Yeah, it is.
So well, you know what? There's a little question. Maybe we can answer this today. You don't want the house back. And there's been a little discussion about foreclosures and short sales.
Mm-hmm.
Is there any vibe? Is there any discussion? Because what we're seeing number-wise in the here and now, nothing with regard, no spikes, no change of direction in short sales and foreclosures listings.
Right.
What is the feeling in the banking mortgage industry about that?
The lack of spikes, or
is this something we may need to prepare for? Are there thoughts of preparation?
I don't think so,
like
Don.
I mean,
banks are working with people that have been furloughed or laid off, or whatever the case may be. I mean, I know Nevada State Bank has worked with their clients as far as forbearance.
Okay.
Letting 3, 4, 5 payments go by, and then allowing them to catch up once they're back to work. So I don't think that we're going to see those spikes in short sales and foreclosures. I really don't.
Okay. Now, the forbearance, and actually this brings up a great question. So Fannie and Freddie, it looks like they've initiated some guidance on forbearance as part of the CARES Act. The CARES Act initially allowed for a 180-day forbearance period with an additional 180 days. And apparently on those conforming mortgages, whatever was in that forbearance window would essentially be tacked on at the end as a second mortgage. And I don't have quite all the how is Nevada State Bank handling it? Is it a one-by-one case, or is there a guidance already in place there?
It so far has been on a case-by-case basis. I've not, honestly, I have not had any clients that I have had to deal with that yet. I
Okay.
know we've had some questions about it and some calls about it, but it once, those people decide to start refinancing, then it will just be handled, like I said, as a case by case basis. It's kind of like interest rates. Everybody's situation is a little bit different.
Okay. So, and that brings up a good question. If somebody's thinking about forbearance, pick up the phone and call Melissa.
Um, I can if they bank with us,
Yes. If they
yeah,
have your mortgage with you.
yeah, I'll put them in touch with who they need to speak to.
Okay.
Yeah,
And in some cases, it may not be forbearance may not be the best option for them.
true. Yeah, very true. Maybe they just need to refinance.
Right. Maybe they need to refinance. They alter their terms of their loan, alter their payment period, where it's something where it can match up, and
Yeah.
then readjust. I mean, on do you have any stats like on average how on a 30-year mortgage where people living, how many times that somebody may refinance that house?
I do not.
Okay. Because I think we went
Um,
through 3 refinances on our last house.
I, it kind of depends. I mean, I've had clients, I have friends that did a 15-year loan and they're getting ready to, I think they're maybe 3 years left.
Right.
That's going to be their forever home. They're going to retire there and they're like my age. Um, it
You mean
kind of
like our
depends on
age?
your situation, whether you want to. I mean, sometimes they do it to pull cash out. Maybe it was a new build and you didn't have any yard or any landscaping, and now you've got a little bit of equity. You want to pull some cash out, put in a pool, put in some trees, or something like that. So that's always an option because that's your money, your equity in that home. You might as well use it.
Right. So at least probably you could at least see one. If you're over a 10-year, 15-year period, probably at least one refi. Probably, but it depends on when you've also bought the loan too.
Well, yeah, that's true. I've had who was that? I had a client last week. He just bought the house last year. He was at 4.25. So we're lowering his rate a full percent. I mean, that's only been a year. He doesn't have a lot of equity, but he put money down when he purchased the home, and just with natural appreciation, he's not going to have MI. So that helped him.
That's great. Yeah. So his loan to value was sufficient enough to avoid PMI.
Right, right,
So,
exactly.
well, is there anything else, Melissa, that we need to share? People important right now with what's going on, because this market has shifted sort of like in weekly or 2 week increments. Um, what do we, are we going to kind of is 2 weeks from now? Is there a sense like, okay, things are going to be different yet again, or do you think we're going to be a little in a holding pattern here through part of summer, like a wait and see?
I don't think it'll be through summer.
Okay.
I think it'll, lenders reevaluate all the time. We do. I know that our top management meets weekly, if not more frequently than that, and makes decisions on stuff. Um, it's going to be, I honestly think a lot of things are going to loosen up in the next, maybe not the next 2 weeks, but definitely the next 2 months if things continue to progress like they are.
Yeah. Opening up phase
Yep.
2 maybe becomes phase 3 here sometime,
Yep.
maybe in July. Let's hope.
Yeah. And I hope by fall we're back to whatever. I don't know that it'll ever be normal, but normal lending guidelines. So I'd love to see our construction come back, which I think it will. I think it'll come back by end of summer at the latest.
Well, I'd love to kind of catch up with you on that when that kind of comes up. We could talk a little bit about the commercial side, and if we bring any other resource from Nevada State Bank on the commercial
Oh,
side.
absolutely.
Yeah,
You know, bankers, they love to talk.
exactly. So it's the real estate agents too. They're just a
Then
chatty
maybe
bunch.
that's a cocktails with Cramer one.
Exactly. Now, ladies and gentlemen, please understand we're going to put some kind of disclaimer under Cocktails with Kramer, whatever is said. You may want to wait till the coffee edition just to make sure.
Right. That it wasn't the cocktails talking.
Exactly, exactly. Well, Melissa, this has been great. It's great to hear. Rates are doing better than they were just a month ago. I mean, really good.
Yeah.
Um, rates across most of the spectrum, meaning FHA, conventionals, conformings, up to jumbos are moving forward again. We get it on the verification of employment. It looks like last week the unemployment numbers here in the state started to tick downwards. Not much, but at least it was a downward number. We're looking forward to see. I'm going to be very curious to see what the employment numbers look like over the next 2 or 3 weeks as we open up the city.
Yeah, definitely. I know some clients going back to work Thursday. Some aren't going back till Monday. So I'm not sure what casino that gentleman was at, but it's happening.
It is, and that's a good thing for Las Vegas, and
Yes.
two, also with Las Vegas, you know, everyone, we've been known as Sin City, but I look at our city and our valley, and I think we've held up pretty well through everything. I think we've kind of kept with the old London, the old English adage of keep calm and carry on. Um, unlike
Yeah.
other places and such, I think we've kind of kept her cool for the most part
Yeah,
in a
I
place
agree.
that's quite usually controversial.
A little.
A little. So what happens in Vegas is not bad,
No, it's not.
and it doesn't just have to stay here, but so
Well, maybe some of it.
some of it exactly.
Yeah.
So, well, Melissa, pleasure as always. Thank you for giving us the kind of the little mortgage updates. Great to hear some positive news there. And ladies and gentlemen, if you've got questions about refi, FHA, jumbo, let's get with Melissa. Put those questions if you've got a question, because you know what? Every question you've got about lending is important, because if you've got some questions, you've got some interest, getting that information out there gets Melissa an idea what we can and can't, what you can and can't do from a loan perspective, or if you want to reach your goals, how to get there. And then when it comes time, whether it's immediately or in the near term, from a real estate perspective, we can then work and adjust accordingly, because you know what? Home ownership is still a dream and goal in life in the United States. I mean, it is the number
Yeah.
one wealth builder. It has been for a long time and continues to be so. So if you have questions, reach out to Melissa on Nevada State Bank, or reach out to me, and you can message Melissa on her Facebook page at Facebook at Melissa Knows Mortgages. So, Melissa, thanks for joining in.
Thanks for having me.
Appreciate it as always.
Do it again.
Cheers to you. And hopefully the next time we cheers, there's an adult beverage in there.
Absolutely.
So, thanks everyone for tuning in to Coffee with Cramer and Colleen this Tuesday. Tomorrow, Wednesday, we're going to go over the stats and the market update. Got some new and interesting news as to where we are at in the housing market here in Vegas. We'll probably have some preliminary numbers with the month of May now wrapped up. And Thursday and Friday, we'll have other news and information for you in the Las Vegas real estate market, the community, and lifestyle, because that's what this show's about. It's about real estate, it's about lifestyle, and it's about community in our little fabulous humble burg, as my friend John Curtis likes to call, of Las Vegas. So until next time, thanks for tuning in to Coffee with Cramer and Colleen. I'm Don Cramer. On behalf of my partner Colleen Schaefer, Give us a call if we can help you with any questions you've got on buying, selling, or investing in real estate. Because right now, especially right now, more than ever, your real estate experience matters. Till next time, take care. Bye-bye.